right, we're going to dive into the three levels separately by itself. I felt like this video should have its own special little section. This is usually the hardest part for people to understand. So I want to give it its own special attention. We're going to go over the three levels on the 15-minute and 1 hour chart. Now, what the three levels is after you recognize that an M and an RW has been set in place, it's going to give three pushes and then it's going to reverse. Those three levels can consist of a push in the consolidation area, and then it pushes again out of that consolidation to break that zone and repeats the process. Sometimes the three levels can be just simple pullbacks, which can be one or two candles, and the move continues in its original direction. So we're going to find these on the chart. And I think I'm going to start with the day because the day looked like a good example. So with the 5 phases in mind, there's always going to be consolidation. And then there's going to be your stop hunt, which was this move low. And then your catch up is going to cross the mustard. And then there's going to be your three levels to play out. I'm going to show you how to identify these three levels, explain them in depth. When it gets choppy, to just leave it alone and let it run its course, and when to stop and when to get out. What we got here is consolidation, Asian session, market open, it's real choppy sideways. Usually that first move out of that consolidation is the stop hunt. In this situation, it was up. We had to catch across the mustard going up, but the false move was the rise up. Once it made this peak, the catch across the mustard again, and it did a sell. So what we have is consolidation, and they set up an M. This is our M right here. Let me draw this out so everyone can see. That's our first leg, and then our second leg of an M, and I catch across the mustard. Once we recognize the M, this first push down is our first level. That's going to be our level 1. How do we know it's level 1? After the M was made, it did a pullback right here. So that's the end of that level. So we're going to mark that as our level 1. This is probably going to be sloppy. That's my 1. We got a second push down right here that broke the first level zone, and then it pulled back. That let me know that this right here was our level 2. God forbid I try to make a number 2 and it just looked good. That's good enough for me. After that level,
are the words sell able to be removed?
Yeah.
Thank you.
Okay. You know what? I'm going to show this both ways. I'm going to show this with and without the moving averages. The purpose of showing it with the moving averages is so you can see the ketchup and mustard cross. So that's helping you identify the M or the W. Then we're trading with the trend, so we want the water on top. So that's how we know we're trading the levels. So we got a level 1 consolidation. We got the level 2. It pulled back, got real choppy. It did another M, gave another perfect entry, catch up across the mustard, and this came and made a level 3. It broke the previous level. After that happened, it reversed. It's not always perfect like that, but that's exactly how this goes. You should be able to see this on a 15-minute chart on every day, on a day-to-day basis. Sometimes the hourly chart will show on a day-to-day basis, and then I will show it on the 4-hour chart where that shows it happening for the week. So after the level 3 is confirmed, we can expect a reversal But to me, unless you're trading with the trend, it's best to leave it alone as a newbie and you're done for the day. If you want to start trading reversals and you work up to that level, you can. So the way that that would look is we got level 1, level 2, level 3 reversal. We have a W here. This was the beginning of the reversal. So the way that this looks is we got a level 1. This red candle was our first pullback. That's the end of the level 1. We got to push up again, up to the water, and then it started to consolidate and pull back. That was our level 2 right here. And then we got another push up to level 3. And as you can see, it could continue. It's not done yet, but it's already starting to pull back. So we got level 1, level 2, level 3 right here. Level 1 is usually the hardest one to recognize. After level 1 has been set, level 2 will give you the most amount of pips. If you catch it early, sit through the consolidation and expect one more push to come and break the area of that consolidation. So what I mean by that, we're going to put a line on it, horizontal line. This right here was the peak of level 2. So I'm going to change the color of these. I'm making some kind of new, I don't know, purple might be. I'll just do a white line. When it made the peak of the consolidation, we're looking for it to break out of that zone. That's how we know the next level has continued. And after that, as long as we stick into our trading plan, our pip goal, 20, 30, 50 pips, whatever your pip goal may be, you can capitalize and be done with the trade. I suggest trading level 2 and getting out somewhere in level 3. Until you have mastered that, it's not really profitable to get in at level 3. You should already be in somewhere, watch level 3 play out, and then get in. Now, if you're on a higher time frame, then those rules can change because the moves will be bigger. Until you work your way up, I will be getting out somewhere around level 3. So I'm going to show the zones here on the M. We got the M, we got level 1 and its pullback. That right there is the bottom of the consolidation zone. So once it breaks out of there, we're able to catch the rest of the move down and trade it down. And then we got the bottom of level 2. It did all of this pullback, found another entry, and then it broke out of that zone and did one more push down. That's why trading level 3 isn't that lucrative, especially on a 15-minute chart, and why I suggest to not trade it until you become an expert at this. It's best to find your entries within level 1 and level 2, and you can let level 3 play out and take your money. Because by then, you will have enough pips somewhere to get out of your trade. So what I'm going to do, I'm going to count the pips at the end of level 1 to 2. That was only 8 pips. And to the bottom, it was 17. From the top up here where the ketchup cost the mustard, you should have been able to get at least 20 pips. Yes, that's what consolidation zone is. Added positions is up to you as a trader. How you like to trade, how many times you like to get in, and all of that is up to you. I would definitely get to that in another class to its full extent. But if you were to enter at level 1 and then recognize you want to get in on a pullback, you can do so if that's how you like to trade. When it makes sense to me, I do the same thing. Only thing I'm suggesting is that you don't do it on level 3 until you've mastered that, because level 3 tends to be the smallest move and the move's over with. Now, this day isn't done yet, so I can't completely show everything. So we're going to go back in time. You got to look left to get right, right? So we can find bigger moves and see how this actually plays out. So a day like yesterday, we have the consolidation at the end of the day here on Sunday. Monday came in and pushed up, and this was our false move, the rise up high. The drop was the bigger move. So if we were to trade this, we have our M right here. One bigger M. Catch up across the mustard right here. It drops and didn't start to consolidate until here, right near the Mayo. So the Mayo is going to be our bottom of our consolidation zone. That means once we recognize the M, depending on how early you recognized it, catch across the mustard should be our latest entry. We would have been able to enter here off of the blueberry and catch this move down. It consolidated. So one thing I am going to point out is how we can try to enter once we recognize consolidation. Now you can enter at the bottom of it. You don't know it's consolidating until you see it pull back. It come and retest that, and then it could pull back again. That's a good, once it does that twice and it's bouncing and it gives like a support and resistance twice, that's a good little zone that you can come and mark up if you need to and mark off your consolidation. Let me see if I could do, can I do a channel? Let me see if this is going to give me what I'm looking for. Yeah, like that. Got a little box, that's our consolidation zone. So that's the level 1 consolidation. Then it broke out of that zone and dropped and gave level 2. This is another consolidation zone.
Can you make it wider?
Make what wider?
Zoom in.
Okay, zoom in. Yeah, I just showed hopefully it might mess up my drawing. Oh, it didn't. We'll just zoom in and focus on this whole day.
Thank you.
You're welcome. Right. We only need to count the candlesticks. You don't necessarily have to count the wicks. So that would be a level 2. So we got 1 consolidation. We got 2 consolidation. Then it broke out and did 3. And after it did 3, it reversed. And then it consolidated the rest of the day until the day ended. This would be our 3 right here. Ooh, that was terrible. It's like the first 3 I ever did in life. Good enough. All right, so we're going to do our best to recognize this without the moving averages. We got little M's up in here. It came and took out this M and extended it wicked to make the real M. That's where I catch up across the mustard. Right here, we have our shift candle, bearish engulfing candle. That showed our M. We got 3 vectors back to back. 1, 2, 3. After it did that, consolidate it. When you notice it set the peaks of the resistance, this would be our support, this would be our resistance. When it came and hit that again, it wicks this time when it did that. And it pulled up again and it stayed pretty much in this general area. It doesn't have to come all the way back up here to be perfect. We know that this is our zone and we want to place our stop loss safely above this area so that we can take the trade down and catch the rest of the move. So in real time, I will come over here, find my entry, worst case scenario, at the bottom of the consolidation zone. Stop loss above the consolidation zone. This is a one-to-one risk to reward, which means we could have took our trade, got down here, and we would have been at a one-to-one. Well, we know this is level 1 consolidation, so we know there's going to be a level 2 and then a level 3. What we can do our best to anticipate how big the move is we can measure from the peak of the first level to the bottom of this level, and that alone gave us 20 pips. So that lets me know that we should be able to catch 20 pips from the second level to the third level. So from my entry, I'm going to set this down to 20 pips. When you use the forecast tool, this number in the middle, the 10.3, is the amount of pips. So we're at 10 pips. So we're going to drag that until we get to 20. I'm going to pause for a second. I do feel like, let me see. Let me double check gold. Oh, no. I'm not getting out of this. It went into profit and then it came back down. It went like 100 pips in profit. But something I forgot to do was set my alerts. Let me run back to gold right quick. Yeah, and it actually hit it. This was our first target. That is my fault. Don't forget to set your alerts. Because it actually hit the first target already. Somebody might be paying attention to that. All right. Just to check and see how many it gave out total at the bottom of the day, it did about 25 pips. So that would have been a 20 pip day. Remember, for me with forest pairs, at least 20 pips. You can go 30 pips depending on how high your entry is. This would have been off the second level with 20 pips. If you enter when the ketchup cost the mustard up here, and we put our stop loss above the high, above the M, I could put it even 14 pips, something like that. Eyeball it. And I could have set my TP for 30 pips. I would have got the whole 30 pips. Now, what I tell people to do, which is what I just did, what I should have did early on gold, is come and set your alert for 20 pips. So you come in here, find the 20 pip spot right here, and then you come over here and then you will set your alert. Hit the plus sign at the alert. That's going to be your first TP. Then you can come find the 30 pips and set a TP for that. And if you're somebody that like to hold your trades just in case, after that point, you've secured profit, put your stop loss in profit, Or if you want to enter again, like some people like to do on pullbacks, you can do that. And you can come and just let the trade run. And if you had to let it run to the next day, it did a total of about 50 pips down here at the bottom before it was completely over and reversed up. It's really that easy. You recognize the M catch across the mustard, that's the first level. And like always, if you do not recognize it, then you simply just do not trade it. So a bad choppy day like this, what do? We got a whole lot of consolidation. It did the pushes up. That let me know those was the false move. The rise was the false move. Because after it got done with that rise, in this situation, it hit the Mayo perfectly. You could have entered off the Mayo. It did a bullish engulfing. So after that, that would have been my first entry. The catch up across the mustard here. Off of this entry, we got one level down, and then we got a pullback. We got a second level down here. It broke this zone. I'm going to mark this all back up how I've been doing so we can follow along with it. You see, we got the peak right here. Oh, and the bottom of that zone right there. That's our level one. And this was just simply one pullback right here. So this is actually our level two. And then it did one more push for three, and then it reversed. I need to know if everybody see that so far because it does it every time. No matter how big or small the move may be, it's going to follow that pattern. And that way you can know where you're at in the move and how far you have to go and gauge it. So we're going to measure the top of this move down to the bottom of level one. We got about 14 pips. That lets me know I can go for another 14 pips. And depending on your entry, you can do twice that amount. So once I measure that to the bottom of level one, I'm going to get my forecast. Short for sale. And I'm gonna start with the worst latest entry I could have had, which would have been the catch up crossing the mustard right here. So I'm gonna put down my forecast tool. And I have the consolidation in the wicks here. So I got my stop loss above that area. If I wanted to be super safe, I could have put it above the Mayo. And the last final is always above the M, above the high. So it's completely out the way. But for now, I'm going to keep it where I had it, above the consolidation zone. It should not come back to that area. Catch across the mustard here. It did it twice, crossed it here, and came back recrossed in the same area. So that was good to go. I have 7 pips for my stop loss. I've already measured 14 pips. This just happened to work out just kind of perfect. It lets me know I can go down for another 14, which would have been here. So my entry would have been here. It came down and right near the end of level 2 where it started to consolidate would have been my target. Now, if I measure to the bottom, I'll go about right there. It did 21 pips. I could have got 20 pips out of this, which would have been right here off of that entry. I'm somebody that loves to do the math. Math was my favorite subject. So if I measure from the top of this candle down to the bottom of this consolidation, and that was 14 pips, I pretty much got 7 pip increments where I got 7 here, 7 times 3 basically, which is 21, which would have let me know that I could have safely did 20 pips. It did about 21, it's just at the bottom of the wick. So depending on where your spread was, and y'all know the spread, this is the spread, the ask and bid, that gap in between. If you're in a sale, this red line would have had to hit the bottom of your target to take you out. The candle could have hit your target, which would have which means that this blue part of your spread is at the bottom of your candle. So let me show where I can explain that a little better right quick. See, it's going up right now. So let's say I'm gonna remove this so you can see it. That the spread, this was the current candle we're on. And you see how the spread is at the bottom on the blue part and the red is on top. The candle can hit this zone, but it's not going to take you out until that red part hits your actual TP, your target. So you want to give yourself a little space each time, a pip or two, to give it clearance to be able to take you out the trade. That's why some people will look at their phones and be like, the candle hit my TP, why didn't it take me out? The spread is the only little other secret weapon that they have, because at any random time, they can make this wide or thin. They can come all the way down here and the candle's hitting your TP, and then they make the spread wide, and now the red line is way up here and the blue line is hitting it, but the red line has to hit it in the sell to take you out that trade. So I want you to keep that in mind. And of course, as we can see after it did these 3 levels, it just reversed again. It reversed, got choppy, came and it did a W. It did the first part here, came back and held that zone, and that was the reversal for the end of that day. Y'all with me so far?
For sure.
All right. I'm gonna show this final example, and then I'm gonna switch to another time frame. So we have our consolidation out of Asia. London session, it rolls up. They let me know the buy was the fake move. The sale is gonna be bigger. Catch up across the mustard right here. So that's gonna be our first sign of an entry. This is our M. We've been going over the candlestick Bible and all that kind of stuff. So we got our reversal patterns up in here. Got these little candles. Then we did a little engulfing candle here, catch across the mustard. That's going to be our first sign of entry. Now that's a little off. Right here. Which means we entered on this candle. As soon as that was done, this cross opened up, we entered right here. I take my measuring stick from the top of that to that. It's only 7 pips. Ooh. I'm going to be able to project the real move. Let's say I enter here. We're going to let this ride until level 1 starts to consolidate. Well, that's right up in here. We got our first little pullback. At the wrong one. Right here. That was the peak of it. And this right here was the bottom with this green candle off of the water. We don't need to count the wick. After it did that, we can come in here. We're already in the trade, but now we want to measure it for real. So we're going to go to the top. We're going to go to the bottom of that consolidation. Top of the M, we got 13 pips. I'll just make it, I'm gonna do 15. I'm gonna just round it off. So I'm gonna count 15 pips. That means I should be able to go for 30. We're in the first level, 15 times 2 is 30 pips. So we're gonna catch the level 1 and we're gonna catch the level 2. So it'll go right back down. We're good to go. Can't get caught by the fake out. Uh Entry, catch across the mustard, did a little bit of consolidation, broke out of that consolidation zone, pull back again. This is our level 2 right here. I don't know why that's doing that. It didn't do what it's supposed to do that time. There we go. Yeah. That's our level 2. So we got level 1 consolidation, level 2 consolidation, and then it dropped down and it did a pullback here. Could be counted as a level 3. I would take that as a level 3 and look to secure my trade at this point because we don't know what was going to happen. We didn't know it was going to drop all day like that. So in real time, we got to go off what they give us. This could count as the beginning of a level 3. It did one pullback, but it didn't consolidate. And so I technically could mark off this whole zone right here because that's where it actually consolidated. Sometimes it could just be a pullback in reverse. We can't be too careful, so we got to let that play out. So we've already entered when they catch across the mustard. What is really going to be my take profit and my stop loss? Catch across mustard here, that's our entry. Stop loss can easily go above the M, above the high today because we're close. I just put it on about 8 pips. We measured from the top of the M to the bottom of the level 1 as 15 pips. I have an 8 pip stop loss, so I can easily go for 15 pips. I can even just do 16, make it twice as my stop loss, and I got a 2 risk to reward ratio. My TP is twice as big as my stop loss. But this first level was 15 pips in itself. So I can easily come in here and go for 30 pips, 2 levels. If one level was 15 pips, I want to catch 2 levels. I'm in here at level 1. I should be able to catch level 2 and part of level 3. That's my only goal. Once that happens, anything else is extra. So once it hit the first 15 pips, let me go back in order. When I measured that, I came over here and set an alert at that price. Came in here, put my alert on. That's what it actually would look like. My Euro USD crossing. That's going to be my first alert. And then I'd come down and set my 30 pip TP. Set an alert for that. And by the time that happens, I've taken a partial profit. I like to take partials because I like to hold my trades just in case it does keep going. If you're with a small lot size, just get out. You hit your pip goal for the day. Whether that was 20 or 30 pips, you're done. You don't have much to take from. You're just going to get out of there. You're going to put your stop loss in profit. Once that target has been hit, you can come and put your stop loss below your entry so that if it comes up and hits the stop loss, you're still in profit. You don't lose any money. You've already taken some money. And then if it happens to go the right way, you just keep collecting pips and you set more alerts and more targets for each time it hits another pip goal. So for me, after 30 pips, I'd be going for 50 pips. It hit the 50 pips. From there, I'd be going further to 70, 80, 100, whatever your trading plan is. It went as low as about 64 pips for that whole day after the ketchup had crossed the mustard up here. So if you entered off of that, you would have been able to catch this whole thing. And then it reversed and went right back into consolidation for the end of the day. It's like clockwork every single time. So that's how we would count the 3 levels, marking it up, marking off the consolidation, knowing that each time it consolidates and then breaks out of that consolidation zone, that shows the next level coming in. And now I'm going to go over a simple way to put it. So that you can show this to 5-year-olds. I'm going to leave that marked up. So we're in the sale, catch across the mustard going down. That's an M. Got an M up here. Came down, came back up. Got an M. Catch across the mustard. We got the consolidation. That means it pulled up. Usually it bounced off the mustard. That's when it's best. And then it sailed right back down. That's going to be our A. Another consolidation zone. Bounced up. Continue to sail back down. That's another A. And it's usually just MAA. So we got another here. And then after the last A, it does a W and reverses. So we should see MAA and then W. This did a few more pullbacks, but we want to count on the first 2 A's. After we see it pull back twice, we want to take precaution and not look for more entries, just let it ride out. You can try to look for entries on level 3, but it's usually the shortest one and it's the choppiest because that's when it starts to reverse and you don't know when that's going to happen. So you want to catch your entry at the beginning, or you can catch it at level 2 and take it down to level 3 and then get out. I don't even enter on level 3 myself typically, unless I'm on higher time frames. So we have our consolidation here. Stop hunt low, false moves low. So that let me know when the catch across the mustard, we were going to buy for the rest of the day. I'm going to check that chat in a second. I'm going to get through this one. And this will pretty much be it. That's our entry. Catch across the mustard. I'll move back. Catch across the mustard right here. Depending on how you want to look at it, this is our W. I don't know why this keep popping up like this. This is our W right there. Come on. That's thing gonna play with me. Ooh, we got our W. Catch across the mustard. It did this whole. Now there's 2 ways to look at this. What is this? June 25th? I'm gonna come back to this twice. Because this did a whole rise and did a pullback right here that continued to rise some more. But this was our real consolidation zone. So this is real key because we can count the pullbacks as a level. And to be careful on the safe side, that's exactly what I would have did with this. This could have been our level 1, and that pullback right there was level 2. It pushed out of there, and then it pulled back again. And then as you can see, it got choppy. This was almost like a little bitty M for a level 3, and it reversed. But this actually ended up playing out the whole entire day. So we're about to dive into this because I like how this played out. With taking precaution, entering when the catch across the mustard, and taking your partials at the pullbacks. This is exactly why I like to hold my trades and not entirely get out. at my pip goal. So what I'm going to do is first measure from the ketchup, crossing the mustard up until the first pullback. That was 10 pips. That means I should have been able to catch at least 20 pips if the first level gave out 10. 20 pips is up here. So if I come in and put in my forecast, we're going to do long for the buy. Long means buy. And put that up. We're going to find my stop. If that was 10 pips, let me see what 10 pips look like. 10 pips right here. Right below the low. That's my stop loss. That means I can come and find 20 pips on here first, which is already good. 1-to-1 risk to reward ratio. That's how much the first level gave off. And since one level gave off 10 pips, I should be able to get at least 20 to catch two levels. That didn't happen until up here, which means when it started to consolidate, it didn't hit it. Now I could have did a few things. I could have got out early and took it and said I'm not going to lose an entire trade because it didn't hit my exact 20 pips. Or I can take a partial, which is what I do. Take some of your money, stay in the trade, and you can put your stop loss in profit. In some situations, you can leave your stop loss right where it's at. It's usually what I do because I like to hold mine for the entire day and let it play out first and see how this trade is going to go. And that's exactly what I would have done. So in this situation where we don't know what's going to happen and they pulled back twice, I would have let it play out. And what ended up happening is that, let me see, we're going to mark off this consolidation right here. We're going to mark off the bottom of that consolidation zone. This ended up being one level by itself. So now I have to ignore these pullbacks because this was the consolidation. When I collect that information and I know I'm going to hold my trade, I then come in here and remeasure it. If my entry was the ketchup crossing the mustard, and I come and measure up to the peak of this consolidation zone, that is 19 pips, pretty much almost 20 pips in itself. If I go to the top of the candlesticks right here, it was 15 pips. So me, because I was originally going for 20, I'm just going to count it as 20, which means one level gave me 20 pips. I can go for at least 40 pips now, which lets me know that I'm at least get my 30 out of it. Gold just bipolar today. It's going up and down. So after I've collected that information and I'm already in my trade, I didn't mean to delete that. What was that? So good, I'll redo it. Forecast, here we go, enter. 10 pip stop loss. Right here below the low. And for everything we went over so far, that would have been our W, that would have been our railroad track right there, and ketchup crossing the mustard. That was our confirmation to enter this trade once the ketchup and mustard crossed. So now if I know that this zone is giving me 20 pips, I'm going to go up to 30 because 30 is the sweet spot for a day-to-day basis. I'm going to set an alert over there to the right at 30, and then I'm automatically going to push this up to 40 because that whole level gave me 20 pips, and I'm going for two levels. So what we got a level one consolidation. It broke out of this consolidation zone and pushed out and gave a level two. After it got to level 2, there was another consolidation zone. This was our first pullback, and this was the bottom of it. So it started right up in here. That was the peak of it right there. Marked off that zone. That's our second consolidation zone. So we got a level 1 consolidation, level 2 consolidation, and broke out, gave level 3, and then it did the real reverse and did an M and reversed for the end of the day back into consolidation. The TP was pretty much the blueberry, came close to it. That's just a little too perfect. You can't beat it. Up to the peak of that, actually gave a total of 70 pips. So I had a 10 pip stop loss. My risk reward is almost 7 times. It's not, I don't have it exact because of the 0.3 and the 0.7, but it's basically risk 10 pips and could have got a total of 70 pips. You would have definitely got your 20, your 30. The first level was 20. So going for level 2 would have been 40 pips. I would have got that. And then I could have went for 60 if I wanted to do all 3 levels. 20 pips on the first level, 20 on the second, 20 on the third, would have gave me 60 pips total. That's how I mapped that out as I hold my trades and continue to catch the rest of the move. If you do not see this by now, this is not for you because that was too clear. We're going to put 9s in the chat. Put it in the chat if you see it. That was way too clear. Now we're not done. I don't trade end of the day reversals because usually they don't give out enough moves. It's the slowest time of the day, and that's really it. It's the end of the day, and it's the slow time of the day, and I don't like to mess with it. It's the end of the session, and the market's about to close. But in this situation, it got close to the blueberry, and it gave it a good enough push to where it gave out another 3 small levels before the day ended. So we got an M right here, ketchup across the mustard. We're going to remap this thing out. Because one thing about the blueberry, sometimes it might hold the trade for just that day. But on a good day, when the blueberry does what it's supposed to do, you can hold that trade for a day, 2 days, even 3 days, even on a 15-minute chart. That's why when I see what I need to see on a 1 hour and it hits the blueberry, I'm holding it for 3 days. Because if it do what it's supposed to do, it's going to give me all 3 days. That has a good 80% chance of that happening. So recognizing that it came up and hit the blueberry, I know I can pretty much hold this for the rest of the day to the end of the day. So I'm going to come in here, I'm going to count the peak of the M down to the ketchup crossing the mustard. That was about 12 pips. I can go for another 24 pips. I can easily get 20 pips out of this. It got to, I'm going to start counting it from where the ketchup crossed the mustard. So I'm going to come in here and I'm going to set up another forecast. And then I'm going to check the chat after this. Ketchup across the mustard there. My entry is discounted. Bam. Okay, we want to put our stop loss above that high. We could put it above the blueberry. 20 pips, 21. 20 would have still had me. I'm going to stick with 21. So I'm going to go for 21. I'm going to come down here and put it at 21, 1-to-1 risk to reward ratio. I should at least be able to get a 1 and go for that in my trade. Off the ketchup crossing the mustard, I would have made that. It pretty much did it in the very first candle. I could have took the water if I wanted, just to take something, but it did it pretty much in the end of that first candle. It pulled back, it bounced off the mustard up in here, and then it gave off a level 2. So we got the level 1, ketchup, cross and mustard dropped. This was our first consolidation, first area of pullback. And then it came and broke that and dropped to a level 2. It started to consolidate here, and then it ended here and reversed back. So I could have took it to the Mayo. And that would have been 31 pips. So I could have easily just went for my 30 and been done with this trade. The only reason I took this at the end of the day like this is because it was holding a blueberry and that had an 80% chance of giving me what I was looking for. In real time, I would have just took my one trade right here and been done for the day. I don't usually trade reversals. Once the 3 levels are over with, that move after that is usually small. The first real 3 levels is the move for the day. This was the overall direction. So once I caught that, I'm usually done anyway. But I just wanted to show this to show how it played out, because it could have went into a phase where it just kept on selling. It got real choppy. Every time it hit the blueberry, though, you could have went and caught that same move. It kept bouncing off of it. When the blueberry was really doing its trend, it would have just kept tanking. It would have been 3 days straight down. But this is really just consolidation. But I just had to show that so I can let it play out. All right, let me check the chat. Y'all got any questions? Oh, and I'm gonna do one more thing I meant to show. Sorry about that. That was our W, beginning of the day W. And so this is our V, which is our pullback. Our other V, this is like a V right here. It's our pullback. It even ended up looking like a completely another W. It can do that as well. As long as you recognize either one after you know there's a W at the bottom of the day. And then it did the M. I guess I did a cursive one. So with buys, there's W, V, V, M. And with sells, there's M, A, W. Back to end of the day. This is a 5-minute chart. We was just on the 15-minute chart. So it looks choppy. And you can see how the pullbacks are marked up. This will show you pullbacks within the levels. So when this was one whole level on the 15-minute chart, on the 5, you got consolidation here. So you got a W here, and you got a pullback here, a pullback here, a pullback there, and then it got choppy, and then it started over when it got to the mustard, and it reset again and repeated that process. So in between the pullbacks on lower time frames, you'll see earlier little entries you can get into if you need to. Because we got this down, up. That's a W. These are railroad tracks back to back. That shows another W to get in for another buy for the rest of the buy. When it was pulling back, it was coming to the mustard. And then this one looks like a V. But then you have all these little areas. It did this bullish engulfing here when we went over that in the candlestick Bible, where it's pulling back this consolidation, and then it pushed up right there. On a 5-minute, you could have entered right here again. And then it continued to push up. And it went into heavy consolidation. But on the 5-minute chart, we got the water on the bottom. And every time this ketchup and mustard crosses up, we can get back in for those buys. The scanner would have showed that for the lower time frame, we'd have had those buys coming in. This works when you looked at the higher time frame first. So the reason why the 15-minute looks good for me is because I always look at the hour anyway. So if I look at the hour chart, I break down to the 15-minute to find my entries. So if you're somebody who watches the 15-minute chart, you could break down to the 5-minute and the 1-minute to find your entries. So that's why that works. My favorite time frame is the 1 hour. So that's why I only break down to the 15. But it's the same concept. But the 15-minute is going to give you the overall levels and what to look for in the day. So you don't want to look at the 1 minute and 5 to count 3 levels for the day. You just want to use that for your entry because it's going to give you 3 levels on a 1 minute and 5, and then they're going to reverse and keep repeating themselves. So it's good to know what direction you're looking for on a higher time frame first, and then break down to those smaller time frame charts. Pullback depends on which way you're going. If the market going up, then that means it's pulling back, going down, and then you're looking for it to continue back up. Vice versa, if it was selling, the pullback will be going up so that you can get in for it to go back down to continue to sell. So that's either direction, depending on which way you're trading. It's $50 a month. The first 7 days are free. It's a free trial, and you can cancel anytime if you want. You can message me. I'll send you the link since you messaged me. I'll give you the link, and then you will need to give me your TradingView profile name so it can be connected to your TradingView. It'll show up as an indicator. I'll show you what that looks like right quick. You go to indicators, and then you have to go to invite only. This might not be on your thing already if you've never gotten an indicator this way, but it'll pop up once it's added to your chart. It'll say ketchup and mustard, no more 95, and then you'll add it to your chart. As you can see here, it has a lock on it, so you'll have to be given access to use it. And the way I suggest people use it is that you will have to have a TradingView plan to receive alerts, but you don't have to have a TradingView plan to watch it in real time, and these will pop up. So if you don't pay for your TradingView, but you have the scanner, these are going to pop up when they populate as you're watching the chart. But if you have the alerts and you pay for TradingView, you'll just get a message to your phone just like you do any other app. And it'll send you the message to trade. You set that message to whatever you want it to be. So like, for example, here, these are all my alerts, and these pop up on my phone. And then you make the alert say what you want. So I do have it for the ketchup and mustard, like ketchup and mustard sell, ketchup and mustard buy. That's for the 1 hour, 15 minute. When it hits the blueberry, I get an alert. I set all those alerts myself. You can custom name them what you want them to say for yourself. And then this is my log of all my alerts that have went off. So every time this goes off, I get the alert, I look at my phone, decide what I want to do. I don't like to look at the charts all day, every day, so I do use my alerts. It works on everything on TradingView. So I know you mentioned you have Tradeovite, so I'm assuming you trade futures. As long as you have the data plan and your future pairs show up on your TradingView, you can get alerts for those. This is a TradingView scanner, not just Forex. It works on TradingView, anything that shows up on TradingView. So you can set those alerts to anything you want to trade, whether it's crypto, stocks. I do gold. This is Forex, silver, copper, it doesn't matter. Futures, stocks. It works on Amazon. It works on anything that pops up on TradingView. I suggest use the 1 hour chart and the 15-minute chart. 4 hour chart, same thing. We have an M right here. M, ketchup across the mustard. And this is going to show, because this is still Euro USD, this is going to show how you can catch way more pips because now you're trading on a higher time frame. So we got the ketchup across the mustard there. We got our first consolidation level here. So this will be level 2. And then we got consolidation right here. That was level 3. And then it ended up dropping a whole lot after. And then it reversed, pulled back and did a W and reversed and consolidated again. So based off level 1, from the top of the level down to the bottom of the consolidation was 53 pips. by itself in the first level. So I'm gonna safely go for 50 pips, which means if I go for 2 levels, I can catch 100 pips. And I'm going to take partials in between that 100 pips. So this is why I like higher time frames. I'm going to mark off my consolidation first. There's one zone. Why it's not giving that to me? It's not doing it right. There we go. That's 2. Pretty much it. And that was our M. This is our A. This is another A. That is cricket. And then this ended up being our W. That's cricket too. Into level 3. You notice 2 levels, so we're going to get out at 3. All right. I'm going to come and drop my forecast. Short for the sell. Short means sell. Catch across the mustard. Latest entry I would have took off of this M catch across the mustard was right here. Beginning of this candle. Now I'm in the trade. We in the thing. First thing I do is I put my stop loss above my M, get it out the way. Let me see, I could have almost did 30 pips with that. 30 pips. That ain't getting perfect, but 30 pips. So that means I can go for 30 pips. So that would have been my first TP. I could easily get 30 pips out of this. Entry right here, catch across the mustard. Drop down. That was right in the consolidation zone, level 1. 30 pips. I'd have put an alert for that. Good to go. Now that I've caught my 30 pips and I've measured the top of the M to the bottom of the consolidation, I know that in itself was 30 pips. So I'm going to go for 2 levels and go for 60 pips. That means my target's down here. Got my alert set. I'm in the trade, holding it, good to go. I noticed it did level 1, pull back, level 2, pulled back here, and then it broke out to finish level 3. I'm going to let level 3 ride. I've taken some of my money. I put my stop loss in profit. I'm going to come and put a target at the blueberry. We got a blueberry. That gives me 87 pips for my entry. Usually, I probably would have just got out right here. I'm not going to lie. It's at the blueberry. But what I do know is that what I do is I break down the lower time frames after that. If I know that this is the blueberry and I come set an alert, I'm going to come watch this on a 15-minute chart. And what's going to let me know if I need to get out or not is if the catch across the mustard going up after it hit this 4-hour blueberry. So I will come and watch that, and looking at these candlesticks, I know it didn't. I'm going to go and show it though. This was May 14th, so we're going to go back to that just to show it. But I'm going to keep counting these pips. When it did the level 3 and started the reverse, it was at 145 pips. Down here at the bottom, ended up going to 170 pips. And you can see from there starting to consolidate. So we was good to go. Now we got real interest with these sales. I can go into depth about how we could have kept entering that. You can, even after I've showed this, you can even see the 3 levels. You can see another M. You can see level 1, level 2, level 3. It reversed and dropped all over again. And it just kept doing that. Your eyes should be able to just see that at this point now. So what I want to do, though, is just point out this blueberry. What day was that? May 14th. I'm gonna go down to the 15-minute chart. I'm gonna go to May 15th just because I want to see it for myself.
Is it always going to be three levels in a trend?
We're always going for 3 levels. That's why I say trade 2 of them and learn to take your profit when in after you recognize the two and take your profit around level 3 somewhere. It
Okay.
doesn't always go perfect if it's a day that it consolidated the whole day. But if it's the
Okay.
move for the day and it's overall going in one direction, you will be able to catch those 3 levels and you will be able to recognize it on the 15-minute chart. That's why I showed that first. Because no matter what time frame you enter on, even though I just showed the 4-hour chart, you should still be able to go down to the 15-minute chart, which is this right here, what I was just showing, and still catch your 3 levels within that 15-minute chart. Because this right here is marked up off of what I just showed off the 4-hour chart. And that was that level 3 at the end, and that blueberry was right in here, which means this is where it hit it at. And I would have looked to see if the ketchup crossed the mustard going up on the 15-minute chart, and it didn't. All it did was bounce off the mustard and kept on going.
Okay.
I just wanted to point that out. That would have let me know right there that I can keep holding it straight.
Okay. Thank you.
You
Fly, I got a question. This is Selena, how
mm-hmm.
you doing?
Good,
So
Lisa.
now with my scanner, and it does say buy and sell, and I know you said that that's at the beginning of the move, but it just seemed like to me on my scanner, it seems like the move to me is at the end.
Is that the end?
It seemed like it. So, but I'm going to be looking now that you pointed this out. So I'm going to be kind of just kind of more aware.
Yeah, well, the whole purpose of me doing these classes is because all of these are things you need to see. Um,
Cause it looked like
with the three,
mine. It looked like when by the time I get in, it's like the move is over, or
yeah, that's because you don't know what you're looking for yet.
Okay, gotcha.
Yeah,
Okay,
yours kind of look just like mine, so we seeing the same exact thing.
okay, all right. So got it. Okay,
Yeah. So the point of these classes is that you know what to look for before the ketchup crosses the mustard, because that's the latest entry. And then things like this is what helps you manage it after it crosses the mustard. So everything's going to be for different reasons. This is the only thing that helps you after it crosses, as far as what to look for now that the ketchup and mustard has crossed and you're actually in the trade. You're going to look for those 3 levels to play out, and you're going to stick with your trading plan, your PIP goals. Everything else that I've done and what I'm continuing to do, I'm not done with this whole course yet. We're only like halfway through it, is what you'll need to see before it crosses. So that when it do crosses, you're not entering every single time the scanner goes off. You're only crossing when everything else lines up along with it. The ketchup and the mustard crossing is the latest entry possible. That's why I'm doing this, so that you don't take it just because the ketchup and mustard cross. You saw 2 other reasons and then the ketchup and mustard cross. And if those don't line up or make sense, you don't take the trade. That helps you use the scanner so that it's more accurate. Because by itself on a 1 hour chart is 80% accurate if you took it every single time. But to increase that accuracy, you're going to look for the other things that I'm teaching. Your 5 phases, which is the first video I posted. I just posted the candlestick Bible. That's very important. You'll need to know that. The 3 levels here is for after it crosses. I still got other things I'm going to teach, like the TDI, and then I'm still going to get into the moving averages and depth again. And then I'll be teaching things like how to set stop losses and take profits and stuff like that, using structure along with using the moving averages and other things that I use. So
okay. Thank
yeah,
you.
you're welcome. I do suggest using it on a 1 hour chart. And one other suggestion I'll make is that it's best if the water and the mayo are on the same side of each other and it's crossing. So for example, we'll look for some of those. So any given point, situations like this, where all the moving averages are on the same side, we got the water, the mayo, the blueberry, they're all on the bottom of the candlesticks, or at least they're on the bottom of the ketchup, cross, and the mustard. And then the ketchup and the mustard cross, those are going to be your most accurate moves when the water, mayo, blueberry are all on the same side. I say at least the water and the mayo, because those will be the most accurate moves. If you go in depth and watch the first class, that is the 5 phases. You will have to understand that to know when to trade and what you're looking for. Because there's always that consolidation, there's stop hunts, and then there's the ketchup, cross, and the mustard, and then there's reversals, and it holds the reversal for the end of the day. Like this was consolidation. It went down first and made the moves down. But then the ketchup, cross, the mustard, water was on the bottom, the mayo was on the bottom, and it pushed up. And so from here, you would know to look for 3 levels. You would see the reversal, and then it was the end of the day. When this reversed, that was the peak. This was done. So when it came and did the buy again, your point was here. This was your maximum point. When it came up to there again, all it did was turn right back around. So all it did was reverse and go back to consolidation at the end of that day. So you would have known, okay, I'm going to take this buy. You're going to count your 20, 30, 40, 50 pips in between all of that. And then you would need to look for 3 levels. The 3 levels really played out at the beginning of the day. So you got to collect all that together to know what should I look for. Also, you will have to stick to your trading plan because you need to know when you're going to get out. You need a 20 pip, 30 pip, 50 pip trading plan. Something that lets you know it's time for you to get out regardless of what happens. And as long as you stick to that plan, you'll secure your trades, you'll win more trades, and then you can learn to hold them in the long run if you start moving and applying these same concepts to higher time frames. So like here, this one to buy right here. It told you to buy right here. Okay, you got in that buy. To the peak of that buy was only 15 pips. But if you look here, where this went off at, it went as high as 25 pips. And that was a big move, and 3 levels played out right here. So if I don't trade this time of the day, because I normally don't, I would have traded this time of the day. I would have had to pay attention to this to know, okay, this only gave me 25 pips in the first place. It didn't even give a whole 30. And this was a big move. Usually the big move don't happen this time of the day, but it did. And it gave out 3 levels. It kept bouncing off the mustard and did all the steps already. So sometimes it'll happen like that, where it happens London session, which is your late evening, and then your midnight up to like 3 in the morning time of the day, it already did its whole move. So sometimes I have to come in here and recognize that it's already done. But then once you know everything, you could have entered off of the mayo and the blueberry. You got railroad tracks right here, and I would have entered down here somewhere. Because these are the things I'm teaching, so that when you see the scanner, sometimes you'll be in the trade once you get good at it before the scanner even goes off. And the scanner just lets you know, okay, now I can hold my trade, because it would have gave me 20 pips from the bottom of that blueberry up to the peak of here. And it didn't even give it still. So then that's why I say things like secure it before it hits it. Manage your trade, put your stop loss in profit. Take some of the money. You got days where it's going to give out a whole lot, and then you just got some days where it doesn't. You got a day like this right here, this is like they gave out a lot. Buy right here off the scanner, all the way up to the top, it gave out 56 pips. So you would have got 20, 30 with that, no problem. It doesn't always play out like that. So that's why you have to learn to stick with a trading plan that helps you manage it just in case something go wrong, which is setting the alerts, putting your stop loss and profit, or take some money early. And if it happens to just go the whole day, that's just a good day. You can't be greedy though, but that's one thing I can't teach. So you got days like this where it wasn't doing anything. But then that's why you got to learn, okay, the moving averages, they're bouncing in between. I wouldn't trade that. I can maybe trade off the blueberry and hope that it's going to hold that. But then all I would have had to do was just take it to the Mayo. If this is less than 20, 30 pips, if I come in here and it did all this and it bounced down and then I wake up 9:30 in the morning and I see this and I'm here and the catch up across the mustard here and I want to take this trade and I notice that it's just bouncing in between the water and the Mayo, I know that the most I can guarantee myself is taking it back up to the Mayo again. Well, from in between this blueberry and that Mayo, it's only 8 pips. So I might not want to touch it at all. Or I'm just going to know that once it gets to that Mayo, I need to get out or I need to put my stop loss in profit. Hey, y'all, my laptop died, but I'm going to end it with that.